What's going on, y'all? Matt Garland here, NMLS number 58700, but better known as MG the Mortgage Guy. We are alive. We are blessed. Thank God for another day. Okay? Thank God for another day. Where's my thing at? Okay, there we go. All right? Got to make sure you're in compliance at all time, people. Okay? At all times. Welcome back to the channel. Like, comment, share, subscribe. Hit the bell for notifications. If you're new here, you never know when we're going to go live. We never know what we're going to do on this channel. We go whenever we want. So if you're new, there's no rhyme or reason to it. There's no method to the madness. But make sure you go to mgbookstore.com. We got a buy one, get one free going on right now. Okay? mgbookstore.com. You buy one, you get the other one free. This was the Black Friday sale, but I think we're going to keep this thing going on to the end of the year. Let's get the books out to the people. Best-selling books. mgbookstore.com. Buy one, get one free. Perfect Christmas gift. All right? So today, let's have a little conversation. I've been reading the comments over the holiday season, and there's a lot of great comments in the comment section here on YouTube. So first of all, shout out to all of you guys who are watching the videos, who are asking your questions. Trust me, they're not going to go unnoticed. I'm going to respond to a lot of these questions, but I'm also going to make content behind a lot of these questions. So if you're watching this video or any of my previous videos, make sure you guys go ahead and leave a comment or question. All right, so this question comes from Juju B845. Okay, she left this a day ago, and it was on a video. I did an FHA loan 2023 video, how to buy your first house with an FHA loan, step-by-step instructions. You guys should go watch that. It's a really good video. But her question was, I definitely understood a lot in this video. Great, all caps, information. But the one question I have is, if you have one credit line of $2K and in good standing and paid on time, would a lender accept that? Okay. The question is, again, I'm gonna repeat it. If I have one credit line or trade line of $2,000 and it's in good standing, it's paid on time, would a lender accept that? I thought that was a very great question, because trade lines, people don't really think about trade lines and how many open trade lines that you need to have. Now, conventional guidelines are different than FHA guidelines. So let's talk about FHA first. So FHA, if you don't have no credit history or limited credit history, typically FHA wants to see two lines or two trade lines, right, for FHA loan. But if you don't have two trade lines, then they'll use what's called alternative credit. Maybe you have a cell phone bill or your rent payments or something like that that we can document and get added to your credit report. Then the lender will use that. So Juju B, to answer your direct question, yes, you should be okay to get a FHA loan. Now, conventional loan, you might have a little bit more of a hard time, right? DU, which is desktop underwriter, might not give the lender the approved eligible just because you don't have sufficient amount of credit. And depending on your DTI, your credit score, it might be a tougher loan to go conventional. So in your situation, I personally would recommend going FHA in that case, since you have limited credit history or trade lines. Okay? Now, this also got me thinking, let's discuss some more guidelines about credit, especially when it comes to FHA loans. All right? Because I don't know, there's been a lot of delinquency reports coming in the news, higher credit card bills than usual. More delinquencies are going to start are going to be on the rise because people are just over leveraging themselves right now. So let's have a conversation about certain things that we will see on credit reports that the lenders might not like a Chapter 13, right? So FHA will consider approving a borrower who is still paying on a Chapter 13 if those payments have been satisfactorily made and verified for a period of 1 year. The court trustee's written approval will also be needed in order to proceed with the loan. The borrower will have to give a full explanation of the bankruptcy with the loan application and must also have reestablished good credit, qualifying financially, and have good job stability. So, if you have a Chapter 13, it's not the end of the world for you. Now, if you have a Chapter 7 bankruptcy, you need at least 2 years, must have elapsed since the discharge date. Now, the discharge date, not the filing date, is two different things. Your discharge date, so you need to have 2 years from your discharge date of the borrower and a spouse's Chapter 7 bankruptcy according to FHA guidelines. This is not to be confused with the bankruptcy filing date, like I just said. A full explanation will be required with the loan application. In order to qualify for an FHA loan, the borrower must qualify financially, have reestablished good credit, and have a stable job. Okay? So again, Chapter 7, 2-year history. Now, if you have any late payments, during the underwriting analysis of borrower credit and overall pattern of credit behavior is being reviewed rather than isolated cases of slow payments. If a good payment pattern has been maintained regardless of a specific period of financial difficulty preceded it, the borrower may escape disqualification. So, just because you have late payments, it doesn't automatically turn you down to get approved for an FHA loan. The main thing is, after those late payments, what have you done for me lately? Have you been paying your bills on time? Period, point blank. And if you can show 6 months, 12 months, 18 months of good payments, everybody has a hiccup. Everybody goes through something where they might miss a bill. Shit happens, right? Underwriters and FHA knows that. So they're not going to penalize you for the late payments. Now, foreclosures. FHA mortgages are generally not available to borrowers whose property was in foreclosure or given a deed in lieu of foreclosure within the previous 3 years. A deed in lieu of foreclosure. Type in chat if you know what a deed in lieu of foreclosure is, yes or no. Type in chat. If you don't know what a deed in lieu of foreclosure is, basically you're giving the deed back to the bank because you just can't maintain the house. So you're saying, instead of we going through this long drawn out foreclosure proceedings, here you go, bank. Take it back. I don't want it. Okay? Now, if the foreclosure of the borrower's main residence was a result of extenuating circumstances, an exception may be granted if they have since established good credit. This does not include the inability to sell a home when transferring from one area to another. Now, extenuating circumstances could be death to a spouse or something like that. I've seen that happen where foreclosure happened because of that. And we was able to get the exception and get it closed in under that 3 years time frame that I mentioned earlier. So, again, the guidelines are favorable if you can document what these extenuating circumstances are. Now, collections, judgments, and federal debts. Very interesting here. A collection is a collection that is minor in nature usually does not need to be paid off as a condition for FHA loan approval, right? Any judgments will have to be paid, however, in full prior to closing. Borrowers who delinquent on any federal debt, such as tax liens, student loans, are not eligible. Let me repeat that. Borrowers who are delinquent on any federal debt, such as tax liens or student loans, you are not eligible. Key is you have to take those loans out of delinquency. Get them out of default. Restart your payments. Once you restart your payments, boom, you're good to go. Now, when it comes to tax liens, income tax liens, you have to get into a payment arrangement. And when you get into this payment arrangement, you must make 3 payments on that payment arrangement. You can't make a lump sum of 3 payments at one time. They have to be consecutively. So let's just say we're going into January. You got into a tax payment arrangement with the IRS, December. First payment due January 1st, 2024. January, February, March. After that March 1st payment, then you can go ahead and apply for your FHA mortgage. Or if you find a house in February or into January and you know you still have this over your head, you just can't make your closing date until after that third payment is paid on March 1st. So if you are going to proceed to go into contract and negotiate for a property, just make sure that you understand this FHA guideline when it comes to tax liens, okay? Now, also what I want to say is you need to tell your loan officer and show the documentation of the payment arrangement, because we need to incorporate that into your debt to income ratio. Okay? So, I hope this information has helped someone here today. If this information was useful to you, please drop a gem in the comments, please. If you feel like this can help somebody along their journey, please share this with your family, your friends, your coworkers. And if you're a real estate professional, I hope this helped you sell more homes. All right? So, with that being said, Matt Garland here, NMLS number 58700, but I'm better known as MG the Mortgage Guy. Peace.